Hello and welcome to IGTV and Beat the Street, the show that gives you all the tradable news and data you need ahead of the Wall Street Open. Coming up, markets taking a breather, investors pausing for breath ahead of inflation, durable goods and consumer confidence readings. And Microsoft and Mistral AI, the deal faces EU scrutiny. And we're also watching crypto stocks jumping as Bitcoin exceeds $57,000. We'll have more on that in a moment when we speak to our very own Pete Ward. Well, good afternoon. I'm Angeline and welcome to this new edition of Beat the Street. Not long now before Wall Street starts trading, just capturing the view there. As you can tell, the upward trend still moving. But let's just take a look at the 15-minute chart, actually the 1-minute chart, because we've just had durable goods numbers just coming out right now. We were expecting negative 4.5 and we got negative 6.1. We're seeing this early chart here trickling upwards. This is the 1-minute chart. Let's just have a look at the dollar index. Not a huge amount of reaction there so far on the Dow Jones Industrials, but let's have a look at the dollar basket for you. And this is the US dollar basket. As you can see there, trickling slightly higher. That figure coming in stronger than expected for the month of January. Actually, I beg your pardon, slightly lower than expected. Negative 6.1 is what we got. We were expecting negative 4.5. If you take out defense month on month, the reading was negative 7.3%. We're also looking out for monthly home price details and also consumer confidence data a little later on in the day. But really, it's a PCE that is the biggest thing to keep your eye on this week. Well, joining me now is Pete Ward from IG here, and he is front and center when it comes to our premium clients. Thank you so much for being with us, Pete. I mean, we caught up before the first quarter, and when we talked then, it seemed like it was going to be geopolitics that was going to be driving the market. But now it looks like it's all to do with really AI and still that frenzy.
Yeah, absolutely. I know last time that we caught up, I think it was the start of January, we just had that sort of meteoric rise from the October lows on all of the indices and the Santa rally. And we've had that continuation now. And yeah, whilst geopolitics and geopolitical tensions are still very much at the forefront of the news, the market seems to shrug these off and continue to grind even higher. We're now a good 8% higher than we were when we last spoke. I think it was on the 10th of January. So, yeah, I mean, we've seen the premise of more rate reductions being reduced. We've seen CPI last week come in slightly hotter than expected, and yet the market continues to grind higher and higher, as you say, on the back of the Magnificent Seven and the AI boom.
And speaking of AI, I'm just pulling up NVIDIA's chart here. I mean, the chart's looking parabolic there if you widen it out a bit more there. And, it's confounded many in the market. They've been skeptical that the bull run for NVIDIA can really last for this long. I mean, is this the tip of the iceberg, or do you think it's calming down a bit now?
I'm not really sure. I mean, I think our client base are net long, about 65%. But to be honest, from the premium desk, I think I see about 50-50 in trade. You've got clients who are trying to short it, who don't believe that the rally, that it's topping out. And then you've got others now coming to it saying this is just the start, scratching the surface. And as we saw on the night of the results, it took a little bit of time for the market to digest the results. But after dropping a little bit, we had basically a 10% move over the following trading session. And I know before the results, there was an implied move on the options market of about 11%, which, to give it some context, is the same size as the whole market cap of Walt Disney, which is 200 billion. So the move that we got was the next day, and it continued, and we saw $800 a share last Friday. So I think there's definitely two sides to the story: people that are just getting into it now, people that are skeptical of the move. But then, yeah, just it's a very difficult one to tell what the real value of this is. And we've seen other stocks related to that, Supermicro, ARM, now become in the top 5 most traded stocks that we have on the platform. If you look on the sort of shares fly out on the platform, it's filtered by an algorithm which does the most popular traded. And obviously got Nvidia at the top. You've then got Tesla, ARM, Coinbase. All of these sort of stocks are all doing the rounds at the moment.
Now, Pete, what are the flows telling us, and what are you hearing from clients on the desk? I mean, is the mood music shifting really now that we've got these Fed rate cut, the timing rather being pushed back ever more?
So I think the mood is shifting a little bit, and there is a little bit of a feeling that maybe the market is running out of steam. If we look at what Axel put out on Monday, which was the trade of the week, he actually went short the S&P with a fairly wide stop loss at about 5,200. But his reasons for doing that was kind of spotting a little bit of technical negative divergence in the charts, but not only in the S&P, but also in the Dow and also in the US tech. So a higher high, but not followed by a higher RSI, a lower RSI, suggesting that the market might be running out of steam. So I think clients are typically looking for the next big volatile event, or what that might be, given that the market has just brushed off so many things. We don't really know what the next thing could be. I suppose PCE on Thursday is the big data point, the Fed's preferred measure of inflation. But yeah, we'll just have to wait and see what comes, because at the moment this market is resilient. The trend is still very much upward, and until there's some significant news, you can't really see what's going to derail it.
Pete, I've worked with you long enough. I know you keep some quite late hours, as I do, covering the late US session. I mean, crypto searingly hot again. I mean, it's the talk of the town. Take us through what's the latest. What are you hearing from your clients?
Yeah, I mean, it's certainly the hot topic up there with AI now. We had just the other week when I was working on the US market covering the Coinbase earnings, we had a good jump up there on the back of the numbers, up about, say, 10%. And then only last night, it put on another 18% on the back of Bitcoin moving up to 57,000. And I think just before the show this morning, we got 57,400 as a high. Now, these are highs that we haven't seen since November of 2021. So I think the general mood is, yeah, this crypto is here to stay. Last year, it kind of doubled without anyone really noticing, from 15,000 to 30,000. Now we're trading at 57,000. And it feels like the support is building to try and make that ascent through the all-time high of 69,000. Now, whether or not that's going to be in the next few days or weeks, who knows? But there's a lot of things that are going on in the background. There's the potential launch of the spot Ethereum ETF in late spring, depending on whether or not it gets SEC approval. There's also Bitcoin halving happening in April. So there's plenty of things going on in the crypto space, and the stocks just seem to be going along with it. So you've got the likes of Coinbase, MicroStrategy, and a few other Marathon Digital, etc. These sorts of stocks are really starting to move now on the back of these moves in the crypto markets.
Thanks very much, people there from IG. And just taking a look at Coinbase here, because it's all sessions and it is up almost 5% as we speak. Now, just updating you on the reaction to the data earlier, just bringing up the US Tech 100 for you, because we are seeing an extension, just showing you the minute chart here, if I may. Let's do the 15-minute chart. An extension of gains, really, after that durable goods figure. Ahead of that number, Chris Beecham has been taking a closer look at the Dow for us.
As we head towards US inflation data later in the week, of course, all eyes are still on US markets, but the Dow still very close to its record high, which set a new one just at the end of last week on Friday. And as we go into the session, it is hovering around the 39,000 mark. There might be expectations, given the strength of this rally, that we could even see it touch 40,000 over the course of the next few weeks. But I think with the data now very much in focus, particularly over the next month, we head towards the Fed meeting, there could be maybe some chance for some downward price action to finally start.
Now, just taking a look at some AI news, we are watching Microsoft and Mistral AI very closely, because it looks like the deal has come up to EU scrutiny. Microsoft, just showing you the animation here, Microsoft's deal with this French tech startup. This came to light quite recently when Microsoft said it would soon make Mistral AI's models available through its Azure cloud computing platform. And Microsoft then said it had also invested in Mistral, but held no equity. Now, spokesperson from the European Parliament, in fact, a European Parliament member, Brando Beneffe, who actually oversaw the drafting of the bloc's landmark AI Act, said what is emerging shows even more that it was good not to water down our ambition on the safety of GPAI, which stands for, if you're not aware, general purpose AI models with systemic risks, following legitimate but strong lobbying from companies like Mistral. Mistral was one of those companies that lobbied for looser rules for some models. Hence, this is to do with AI, and hence that's why this deal has raised concerns in Brussels. To show you Microsoft shares, because it is all sessions, not really, that's the 1 minute chart, not a huge amount of reaction there, but we are watching the story very closely for you. Now, in the retail sector, we have had some news out from Macy's and also from Lowe's. I mean, they're not traded all sessions on the IG platform, but what's interesting to note, where you can trade it when the cash opens, is that Macy's has come out with annual sales expectations that were weaker than expected. This was because it saw less consumers wanting shoes, its apparel and shoes. And as a result, the company is going to shutter 150 stores through 2026. And the store closures come at a time when many retailers have been battling the cost of living crisis, but also less footfall as consumers continue to shop online. Also want to show you Lowe's because that's another one that you can trade during the cash session. There you have it. Lowe's projecting weak sales as well, joining its bigger rival, Home Depot, saying that the slow recovery in the DIY market is going to be probably quite long because the elevated prices, well, that's not coming down anytime soon. And also uncertainty over the US economy's prospects, despite the fact that it has held up relatively well. Investors who are watching this sector perhaps disappointed by the outlook by Home Depot and Lowe's recently. So you can trade that when the cash open starts. Also, one other last thing that we're going to look out for you. I mean, the key thing to watch out for, as Pete mentioned earlier, is the PCE. But it's also a big week for crude. I'm showing you the crude oil there, and this is the chart. Let me show you Brent as well. As you can see that we're in a trend channel that seems to be consolidating. If I draw the lines for you, a bit of a ascending triangle being shown here. However, it's still early days yet. I'm showing you the line there. And what we're watching out for, because we've touched 3 lines there, that's quite a strong signal. What we're watching out for is, if we can move this for you, a breakout above this triangle. And then that would mean that there's another push up from the technical point of view. But at the moment, it's still very much a demand picture, and also oil prices being underpinned as investors weigh up the Gaza ceasefire signals. But until that comes through, we are not seeing much of a reaction, still stuck in that narrow band. Now, a quick look at the indices before we end, because we had that durable goods number. Just showing you Wall Street there, if we may. This is the daily chart, but let me show you the 15-minute chart to see whether there's been much of a reaction. Pretty much any reaction is down to the NASDAQ, showing you that there, because we did see an extension of losses there indicated. That's it for this edition of Beat the Street, the show that follows the trading action, helping you position yourself ahead of the opening bell. For more trading insight, do follow me on @Angeline Ong and @IGCom on Twitter. This is IGTV.